and welcome to the weekly gold market review on Saturday the 23rd of July 2016. We'll start as always with the weekly chart, and gold continued to fall this week, having made the engulfing candle here last week. There's really strong resistance at around the 1380 level, with the 38.2 fib retracement level from this big downtrend move here, or this big downwards move here, and the downtrend line here holding out resistance around 1380 at the moment. There's also congestion from previous highs around this 1380 1400 area, holding gold back from moving higher. So while there's quite a lot of geopolitical uncertainty in the world at the moment, which is likely to push gold higher through the rest of this year, we feel in the near term it's more likely that gold will move sideways stroke backwards down towards the bottom of this uptrend channel that it's in, and this 23.6 fib retracement level, probably around about 1290 1280, before making another assault on the downtrend line here. And so we can also see that through late summer, early September, late September, these downtrend line and uptrend lines converge, and there's an apex formed, and one way or another gold has to either break out of this uptrend channel or break out of this downtrend line, and so gold will move quickly in the same direction as whichever side of that pattern it breaks out of. So you'll also notice here that we can see the 200-week moving average, this red line, and the green line, which is the 20-week moving average, are getting closer and closer together. And if gold continues to sort of slide slowly backwards and then put some gains on, that will increase the faster moving average and drive that up through the slower moving average. And when these cross over and the 20-week moving average goes above the 200-week moving average, that will look very bullish for gold, and we'd likely see gold move higher. So if we see gold moving higher, breaking out of this downtrend line, first resistance 1380, and then we've got 1400 being the round number, 1430 and 1480 as key resistance levels. If gold was to fall through the bottom of this uptrend channel and break out in that direction, then we would see support around 1250, 1225 and 1210, 1200, with 1200 being the round number and this 50% retracement here. So if I flick over onto the daily chart, we can see a fairly mixed picture here. We can see that we've got strong bearish RSI divergence, with this high here not being beaten from an RSI perspective, but price continuing to make higher highs. That for us we would normally read as a bearish signal and expect price to be topping out, losing momentum and falling. Whereas on the flip side of that, all of the moving averages are still pointing up, although starting to turn maybe a little bit, but absolutely still pointing up, with the 20-day moving average higher than the 50-day moving average, which in turn is higher than the 200-day moving average, and that paints a fairly bullish picture for gold. So the best thing we can do really at the moment is sort of sit on our hands and wait and see which direction price moves into. We can see here in the last few sessions price has started to consolidate and slow down and find itself trapped between the 23.6 fib retracement 38.2 level from this move here, and that may well be the case through the early part of next week, that it continues to trade in that narrow range until we get the FOMC rate decision and the associated press conference. That from a news perspective is likely to have the biggest impact on price movement this week. So in terms of positional plays for us, it's most likely that, as I said, we'll sit on our hands for a while and wait and see which direction gold moves in, see if we can get a clear read from that. A fall below 1300 through these fib levels here should see price move to around about 1280 and get stuck on the bottom of this downtrend channel. Then it's really a question as to whether or not it can break below that channel. Similarly, if price moves higher out of this range, then we would expect price to move up towards this downtrend line, and then it's a case of whether or not it can break through that successfully. In either of these two scenarios, if it gets stuck here or gets stuck here, there may well then be a trade in the opposite direction as price reverses. So if price fails to break through the downtrend channel, then we may go long and take a move back up towards this area of consolidation that price is in. Similarly, if price fails to break through the downtrend line here, then we may go short and trade our way down to here. It all depends on the risk reward profiles of those trades and really what we see at the time. So let's have a look at the trades that we did take this week, the intraday trades. We had 2 losses and a winner, which was okay, but we were slightly disappointed in the winner as we moved our stop in just a tiny bit too close to the action and got stopped out, only to see price move back towards our target, although not quite take that target out yet. So it remains to be seen as to whether or not that would have gained more points, or whether it was a shrewd move to put our stop in that close. That's the way it goes sometimes, and we'll take our profits and we'll move on. But let's look at that first trade that we took. So the first trade we took was Thursday around about 9:30 a.m. I've put the vertical lines on the chart here so we can see where those trades were, and we're looking at the 15-minute chart. Now you'll notice on the trade alerts that we send out and on the chart times here that the clock is always 2 hours ahead, and that's just because our platform's hosted in Europe, where we're based in London. So if I take a look here on the 15-minute chart, in the case of the first trade, what we see is a failure to break through this fib retracement, 38.2 fib retracement level on the 15-minute chart, with price in the overbought, or RSI in the overbought zone. And then if we drop down quickly to the 5-minute chart and look at this one, what we'll also notice is we've got RSI divergence, bearish RSI divergence, which is one of our favorite signals. We've got a high RSI point here associated with this spike, and then RSI continues to fall away, but price goes higher, making this high here, failing to get through the 38.2 fib level. Great signal, and so we went short. Everything looked really good on that one for an amount of time, with price coming to within $1 of our target at 13.1, only for it to do the dirty on us and swing quickly in the opposite direction, stopping us out over here, which was a bit of a blow, having been so close to banking a winner. But that's what happens sometimes, and you move on. Bringing us on to the second trade, which is similar in profile, in so much as we've got on the 5-minute chart still this RSI divergence from this RSI high here, price continuing to make higher highs, but the RSI was lower, so that gave us a read. We'd seen price fail to break through this 50% retracement, and although on the 5-minute chart price had broken through, when we look on the 15-minute chart at that trade, price, we were really banking on price reversing down and closing below it and giving us a good entry point to get in around to this level for a reversal. That didn't happen. It quickly went against us, as you can see here on the 5-minute chart. It was a tight stop, low risk trade. Seemed like a good bet, but price continued just to power higher, taking us out and leading us on to the winning trade, which you can see here on the 15-minute chart. We've got RSI divergence again, so we've got the bearish RSI divergence, where we've got a high here on price and a high here on RSI. Price moving higher, making higher highs, but RSI making lower highs, and so that was a good indicator that price was looking to reverse, go in the opposite direction. On the hourly chart, we've got this downtrend line here and the 200-hour moving average, which has turned over quite sharply, and we felt that price was running out of steam around this level, and that it was unlikely that it would go higher than the downtrend line and the 200-hour moving average. So we put our stop in above this level here, and we took a short. Price did continue to go higher for a little while before doing exactly as we thought it would, which is failing to get through these levels and coming down and coming right in our direction. We almost got to our target price. Price stalled, so we bought our stop in to protect some profit. As Sod's Law would have it, price then moved, took our stop out, and then came down and almost hit our profit target around 12.19, but not quite. We walked away with 40 points. A bit of a shame it was only 40 points and it could have been more, but as I said before, it remains to be seen whether or not we'd have actually won on that, and so there's no point looking back on that too harshly. We've taken the money and we need to move on and look for the next trade. So that's it from us this week. Again, welcome back to all those subscribers who rejoined us this week. It's great to have you back, and let's look forward to a few weeks of positive gains as gold consolidates, looking back on the weekly chart in this area here, moving higher and lower between these areas before it breaks out in either direction, which should throw up, if it doesn't throw up many positional trades, it should throw up plenty of short-term intraday trades, and that's really what we're looking for at the moment. So thank you for watching, and goodbye.